Hey guys, Michelle Kinney here. Thanks for checking in. Thanks for checking out my video. A lot of times people ask on this channel, hey, can you do a video on this stock? So this guy Byron on my YouTube channel asked about RGTI. So this video is dedicated to you, Byron. Okay. So this is my trading platform. All I'm going to do is I'm going to add the stock here, RGTI. This is Think or Swim, RGTI. I'm going to hit tab. Now, I have mine to set up when I click on the stock here. It changes the chart here. It changes the option chain here. So you want to have everything linked together. And now you could do one of two things, right? So all of my videos talk about just two things: sell a put, sell a covered call. That's it. So right now the stock price is here, 33.675, or now it's 33.69. You can see it's kind of been in an upswing, significantly upswing lately. Now here's the thing, guys. Highs go higher, lows go lower. When things are high, it's good sometimes to sell a covered call. You can capture with the momentum, right? So the momentum is going up. You can buy 100 shares of the market. Let's just look through this trade and let's evaluate it. Is it a good trade? Is it not a good trade? So let's say I want to buy 100 shares right now. What I'm going to do is I'm just going to click on the price right here. I'm going to click buy. And then it brings up my order entry box, right? Buy 100 RGTI. I can change this from a limit order to a market order. Market order means it's just going to fill wherever the market's trading. And then if I right click, now you can buy stock and you can sell puts in one of two ways. You can use cash in your account and put up all the money, or you can use the bank money and use margin. I like using margin. You have to be careful. You have to make sure you don't overextend yourself. I talk about that a lot in other videos. This video is just kind of going through the motions and telling you exactly what the covered call is, what the put is, how much does it cost, how much do you make, that kind of thing, and how do you enter the trade. So check it out. So if I want to use margin, I'm going to right click this on the order entry tab here, and it's going to bring up a box down below, right? And it's going to tell me my margin required is 23.59, right? Okay. So if I was to buy 100 shares, I get to use about 2/3 leverage, right? So if I have to put up all the money, I would put up 100%, right? 33.59 times 100 is $3,359. But if we use margin, we're only putting up $2,300. We're going to round it off to say 2,400. So now let's calculate the rate of return if I am to sell a covered call, right? So if I buy 100 shares, now I can sell a call against it. There's no time requirement that you have to hold those shares. So in other words, you can already have shares if you want. You can buy shares right now and then sell a covered call against it. So let's take a look at what the calls are going for. Now the strikes are down the middle, right? And what I do is I go out 1 week, right? So I like short-term trades. I don't know what the market's going to do. I want to create short-term weekly income for myself, but you can go out longer if you'd like. You can see the expiration dates here, September 26th, October 3rd, etc. But let's look at the September 26th. And I also, the way I do it is I go to the next strike. So if I'm buying 100 shares at 33.69, let's say, I'm going to sell a $34 call. So I'm going to buy the shares for $33 and change. I'm going to sell the call with a strike price of 34. I'm not so much concerned about the price appreciation. I want to make the most amount of money in premium as possible, because premium is guaranteed income. I want to hit singles every single week or as often as I trade, and I don't care about those home runs, right? So if I was to sell a $34 call that expires Friday, that's only today's Wednesday, so Wednesday, Thursday, Friday, 3 days away, I would make it last traded at $187. So here's what that means, guys. I put up what was the margin on this trade? The margin on this trade was 23.50, we're going to say. So I'm going to put up 23.50 in margin, and I'm going to make $187. So we're going to divide 187 divided by 23.50, and that gives us a rate of return. So that gives us a rate of return of almost 8%. Oh, that's a lot. Did I do that right? $187 divided by 23.50. Yes, I did do that right. Almost 8%. But remember, guys, that's 8% over a 3-day span: Wednesday, Thursday, Friday. So here's what I'm going to do. I'm going to divide by 3, right, to get my daily rate of return. That's about 2.5%. Now I'm going to multiply by 252 because there's 252 trading days in a year. So I'm making 668% on my money. And that's kind of how it works. Let's go back to the chart again. When we see the chart and it's got that big momentum up, when you have high momentum, the premium is like what I say, a fat premium. So it gives you more premium. Now, obviously, there's a little bit more risk. Where's the risk, Michelle? If I buy 100 shares at $33 and change, and I sell a call against it right away, what if that stock drops? Well, guess what? You have to be okay with holding that stock for a period of time. A couple of things. Number one, if you don't sell your shares for less than what you paid, you're not going to recognize a loss. If the stock goes down and you hold on to your shares, it's only a paper loss for a period of time. Who cares about a paper loss? It's like this. Let's say I own a house and I'm Airbnb-ing my house, right? And let's say a housing crisis comes along and my house value is a lot less. Let's say my house used to be worth 500,000 and now it's worth 300,000. It doesn't matter if I'm not selling my house. And if I'm Airbnb-ing my house out all the time and I'm still taking an income, it does not matter. Don't focus on things that are irrelevant, okay? Wall Street has you like brainwashed. A lot of people brainwashed about paper gain, paper loss. Let me buy some stock, hold on to it for a really long time. Let me buy some mutual funds. They brainwash you because they make money off of you like that. Oh my gosh, they have like trillions of dollars in these crappy mutual funds and they don't want you to do it yourself. But the fact is you can very easily do it yourself. Let's calculate the rate of return if I had to put up all the money, because remember, using margin is a little bit of a risk, right? What if it goes down? You don't want to have a margin call and have to put money in. If you don't have the money to put in after a margin call, they break your trade, which forces typically a recognized loss. So you don't want that to happen. That's like the number one thing that blows up people's accounts. So let's just calculate if I'm not using margin. I'm making $187 and let's say I have to put up all the money. Well, if I buy 100 shares at 33.66, that's where it's trading now. I'm going to do 187 divided by 33.66, and that's going to be 5.5%, right? But remember, again, we're only holding it for 3 days. So I'm going to divide by 3, and then I'm going to multiply by 252 because there's 252 trading days in a year. I'm still making 466% on my money. Here's what that means, guys. I'm going to break it down to you in plain English. Even the most conservative trade, you have all the money, you're not using margin, you believe in RGTI. Personally, I don't even know what this stock does. Somebody asked me to do a video on this, so he likes it. I want to look it up maybe after this video and check it out. Maybe I'll trade it myself. But going back to my example, walking through exactly what this means, I put up all the money. I'm not using margin. I'm making 466 annualized percent of my money. What does that mean in dollars? That means if I start with a $10,000 account, I can very theoretically make myself $40,000 a year. And do I have to wait that year to make that money, by the way? No, I'm making money from week to week. I'm showing you in black and white. People say options are dangerous, options are risky, don't trade options. They don't understand them, and they're just, I don't think they're lying necessarily. They're telling you what they think that they know, but they just don't know. You're making 400% on your money. Now, do I target 400%? I target 100%. If I'm making 100% and I do trades that make 100%, it's very, very, very easy to keep flipping your money and create yourself a steady stream of weekly income. Now let's look at the put side, right? Let's say I don't want to buy the stock and I want to keep my money in cash. Let's look at selling a put, or you could do both of them together. You can sell a put and you can buy shares and sell a covered call. You know, only two strategies. You can mix and match them, find your groove, right? So let's look at, let's say, we have to choose the strike price. Remember, you pick the stock, you choose the strike price, you choose the expiration date. You are the driver of all these things. Dude, you can like literally create yourself whatever lifestyle you want. I'm going to make this video. Sometimes I edit these when I make these videos sharing my screen. It takes me a little bit of time, and then I'm going to go swim at the pool for a while. I don't spend time looking at trades and searching through, you know, stock scanners and stuff like that. I don't want to spend my day like that. I want to spend my day. I'm in LA and I'm hanging out with my kids. I'm flying back to New York tomorrow, and I want to go hang out at the pool and catch some sun and then cook on the grill. And that's how I want to spend my day. You can do the same thing. So let's see. We can choose the strike price. Let's say we choose a close to the money. Now, the closer the strike price is to where the stock is trading, the more money we're going to get. Why? Because I mean, that's as you do this, it's going to become second nature to you. It's logical because it's more likely to stay at that price, right? But let's look, I like to go a little bit away because honestly, when I'm putting my trades, how I do it, and listen, I'm just sharing with you how I'm doing it and how I've been doing it for years. But again, you're going to find your groove. My preference is that I sell a put and the stock does not go to the strike price and I don't have to buy the stock and I keep the premium. The reason why that's my preference is when you can drive income off of keeping your money in cash, that's the best thing. It's kind of like that's the golden nugget, right? But if I had to buy the stock, if it goes down, I'm okay with that as well. And either way, I keep the premium. Listen, guys, this is not freaking rocket science. So let's say I look at I'm going to look at delta. Delta is the statistical likelihood the stock is going to drop to that price before the expiration date. So let's look at a 31 delta. It's only 31% likely it's going to go below that price, 31.50, right? So the price right now is at 33.65. It's more likely than not that it's going to stay above the strike price. And that last traded for $114, right? So I'm going to do the same thing. I'm going to divide $114. If I had to put up all the money in this trade, how much money would I need? I would need $3,050 because the strike price is 30.5, you see, times 100. Each contract is 100 shares. So I'm going to divide by 3050, and that gives us a rate of return. Again, just like previously, this is a rate of return for holding it for 3 days, Wednesday, Thursday, Friday. So what am I going to do? I'm going to divide by 3. And then I'm going to multiply by 252 because there's 252 trading days in the year. Oh my gosh. Props to Byron because this is maybe a good trade. I mean, I don't know what the company does, so you want to do a little research. Is it some, crappy company that might go out of business tomorrow? You have to evaluate that. I mean, that's on you. I mean, it's your money that you're trading. I'm just telling you what I'm doing, and I'm sharing the strategies that I'm using, but ultimately it's your money. There's risk in the market. You have to identify that and see if you think that risk is manageable or not. Is it likely or not? But here's what that means in plain English. I'm going to break it down for you guys. I have $3,050 in my account. I'm not using margin. I have all the money to cover the shares if I had to buy them. So there's no risk of anybody breaking my trade because I'm putting up all the money. This is called a cash secured put. I was making $114 that gets dropped into my account right away. This is not like stocks or Bitcoin either, for that matter, where you buy something and then you got to wait some infinite amount of time to sell it to recognize your money. No, this is creating yourself income right away, and you can spend that if you want. So I'm getting $114 in my pocket. I can spend that. One of two things is going to happen on the expiration date. RGTI is going to be higher or lower than 3150. If it's lower than 3150, I'm going to buy 100 shares. If I have to do that, I'm fine with that. Why? Because I'm going to sell a covered call against it the following week, and I'm just going to keep flipping my money. Listen, if you guys are working some crappy job that you don't like, or your life is something that you don't want it to be, you have the power to change it. If you have $2,000, $3,000, $5,000, these strategies work no matter how much money you have. You got to have a couple grand to start. If you have even more, that's even better. Because here's the thing, guys. If I'm making, let's say, 300% on my money, if I'm starting with 10,000 bucks, I'm making $30,000 a year, maybe, right? Based on this particular trade, if we annualize it out. Now, there's no guarantees in the market, and there's going to be risk, obviously. But I'm showing you in black and white that it's totally achievable. So if I start at 10,000 and I make 30,000 a year, props to me, right? If I start with 200K in my account and I'm making 30%, now I'm flipping that 200K to 600K per year. This is how you can make money on a regular basis. You don't have to go somewhere. You don't have to work for some guy who's telling you what to do. You don't have to be at some job at a certain time, drive to work. You can literally, I didn't even take a shower yet. I'm just in my pajamas. I'm going to put my bathing suit on in a moment. I didn't even look at the market yet. It's 11 o'clock. I was just running a couple errands this morning, made some breakfast, that kind of thing. And then you can spend the day doing whatever it is that you want to do. People ask me, how long does it take to learn? It's going to take a little bit of time to learn. I talk through these videos quick, so watch them over and over again. And I have tons of videos. I have tons of free stuff on this YouTube. I do events at the same time where I give you the opportunity to ask live Q&A questions. It's like anything else. When you're learning something new, you got to put a little bit of time and a little bit of effort into it. It takes maybe a few hours to learn the fundamentals, and then it takes some practice. Like, just keep doing it over and over and over again, and it will become second nature. This is a skill that I'm teaching you. If you embrace it, that can totally change your life for the rest of your life. Anyway, that's it. I think this video is long enough. I hope this video helps. Props to Byron for giving me the idea of RGTI, and cheers for now. Take care.